pleasure speaking with Mark, financial firefighter, and we went deep on out-of-state real estate investing. I think I want to give the audience a flavor of some things that were discussed there. Of course, we're going to talk about the jobs market. We got the second of 3 jobs numbers today, ADP private payrolls. We will talk about Americans traveling for the 4th, and I will give you 5 bad financial advice that I have heard over the years. Folks, if you are trading in the stock market today, please know that it is a half day. It will close at 1 o'clock Eastern for the 4th of July holiday. So folks, let's get into it. Out-of-state real estate investing. Lots of folks over the years have been enamored with investing in middle America, in cheaper markets. It is an often question I get from folks that live in my backyard, the Silicon Valley, New York, things of that nature. So I just want to give you a flavor of just some of the things that we spoke about there. If you are in our school community, thank you. I want you to know that the recording is already uploaded, so you can watch it on replay. So again, go to the classroom, find the thumbnail that says special guest, click on that thumbnail, and you will see over a dozen millionaire conversations on replay. So out-of-state investing. Again, shout out Mark from Hawaii, who invests in Pittsburgh. That is quite a ways. Number 1, the biggest hint, the biggest shortcut is finding investors who are already successful. Folks, you got to have somebody that can help you show the ropes, that can help you shortcut some of the mistakes. Mark talks about a friend who had been investing in that market for 2 or 3 years. He helped him get started, introduced him to teams, things of that nature. But as Mark discussed, that will not eliminate all mistakes. You will undoubtedly make your own. It will just shorten the cycle. It will allow you to reduce the amplitude of any mistake, so it won't be horrible. It'll just be a mistake that you learn from. Number 3, don't rush it. Some of the folks that I speak with have some capital that they've been ready to deploy. Sometimes you get enamored in a cheap market. Maybe you have a good experience with the first and you go, hey, if some is good, more is better. That could be very, very dangerous when you are 6,000 miles away. I have said many, many times, hey, get the first one. Wait 6 months. Get the second one. Wait 6 months. You've got to give it a season. You've got to understand, are the numbers right? Insurance, taxes, turnovers, rent collection, all of those things. So don't be in a rush to go fast. Number 4, some folks are better served simply going out of area. Again, I want to remind you, the one in great Dion from Dion Talk, he simply expanded his search 30 minutes and he found a duplex that was listed at 500 grand on the water or near the water views, and he got it for 400 grand because it was listed for a long time. He knew his numbers, all of those things. Don't be in a rush. I get a lot of people going, hey, I've looked in my market for 2 weeks. I'm going out of state. Well, have you taken out a map and just looked 30 or 45 minutes further? I don't think out-of-state investing is the cure-all for everything. It is awesome. It can be done well. We will be talking to Millennial Mike, who again is in a very expensive part of the West Coast to invest in Gary, Indiana soon. I think we have that scheduled sometime for next week, but we will make that happen, no doubt. So again, it can work, but some people are in a rush to get there. And the last one, actually 2 more. We'll do them reverse. The bad things will happen. Just like investing in your backyard, bad things will happen. Unfortunately, they will be farther away. Think about Mark's example. He lives in Hawaii. He invests in Pittsburgh. That's a 6-hour time difference, right? It's when Mark's up, it's midday, and you only have a couple of hours of overlap. So again, remember, bad things happen. Sometimes time can get away from you when you are out of state. And then here's the last one. You got to get in groups and tell people what you're looking for. So for example, if you're thinking about investing in St. Louis because you know or have experience in the St. Louis market, look for other investors. If you're in our school community, tell them that you're looking in St. Louis. I think you'd be surprised who could help you. if you're in my private Facebook group with 2,000 members, I guarantee you there is somebody investing in St. Louis or Nashville or Huntsville or wherever. So again, do yourself a favor. Don't be shy. Network. Get uncomfortable. You won't die. I promise. Just keep going. Keep networking. Again, one of the 7 rules for ORAT is networking. Meet 2 new people a week. Don't be shy. All right, let's jump into ADP payrolls because, again, we get 3 numbers every month on jobs. First was JOLTS, which was yesterday. Kind of a little bit more jobs than expected, but there was a big revision last month. So, again, let's call that neutral. ADP private payrolls showed 150,000 positive, right? So job growth was expected to be 160. Last was revised to 157. So you can see the job market throttling back, but for all intents and purposes, not falling apart. But again, as always, the big number is Friday. That is the one we care about. I don't know the expectations, but I do remember last month was a massive beat, which frankly was a very dirty number. We lost full-time, we got part-time, but hey, we will look at that on Friday. If you want to know where the jobs are, leisure and hospitality made up almost half, 63,000. Construction, 27,000. Business services, 25. There was some shrinkage in manufacturing, down 5,000, and resource and mining, down 8,000. So again, some growing, some shrinking. Wage gains for employees who stayed put came in at 4.9%. And job switch, right? You leave one job, go to the other. That came down to only 7.7. I don't know about you, but would you change jobs? Would you risk being the new guy to go to a new employer for 7%? I would not make that leap. If I'm going to go to a new shop and risk being the new employee and give up all my, capital at the old job, I'd want 15, maybe 20% bump to make that leap. But hey, that's just me. Don't know if you saw this yesterday, but Nancy Pelosi is out saying, you know what? It is a fair question. It is a legitimate concern, Biden's age. It seemed to be a different talk track than I've heard the last couple of days. But yeah, we'll see what happens. Tomorrow's July 4th. I wonder if we get an announcement on July 4th. Seems to be good timing, but hey, we shall see. GM, General Motors, reported a record quarter. Folks, whatever happened to cars being too expensive, nobody can buy? GM just reported a record quarter. It was the record quarter since 2020. Some deliveries also were pushed to Q3. I don't know if you were following the news, but apparently some system that is important to the car dealership area was hacked, and they were trying to, manage manually or something around that. So again, even with that, even with clearly some deliveries pushed to Q3, they still had a record quarter. We had Powell Speech yesterday in Europe. I told you we'd get more data. It's really more of the same, but here we go. Want to see more progress on inflation? More confidence that we're moving to 2% before we cut. And I think this final one is the most important. Jerome Powell is aware if we move too fast, we could undo what we have already done, right? Declaring victory early could be a reignition of inflation. And folks, remember, go look at the chart on inflation in the 80s. This is what they had to break as inflation just kept going up and down, up and down. They had to Paul Volcker and rip rates higher to finally cause 2 nasty recessions to break the back of inflation. I do want to remind you, if you're in our school community, we are now doing, I shouldn't say we, I should say Frank, old guy REI, is doing Wednesday accountability groups. These accountability groups are in the evening. I know lots of folks would prefer evening calls. So an accountability group, what is it? Of course, I'll let Frank describe it to himself, but basically you join this community, other people doing the work, asking questions, holding yourself accountable, meeting new people, asking questions. It is the most positive place to be. Get in an accountability group. And again, weekly Frank has signed up for. So shout out Frank, we owe him a ton. How about travel? Folks, I don't know if you know this, but they are expecting this July 4th travel season to be a record breaker. It is expected to be the busiest in history, which is interesting because I also hear that 36% of Americans are willing to travel and add it to debt. Folks, we wonder why Americans live paycheck to paycheck. It's because they feel they deserve this, they deserve that. Folks, if you want to get wealthy, you want to get rich, you got to live below your means. You can't just say, hey, I'm going to rip off to Vegas, go gamble, and put it all on a credit card. That's not how getting rich works. That's how you make other people rich. I don't know. I don't get it. How about mortgage applications? Well, folks, we broke the 3-week trend. We had 3 weeks in a row where mortgage applications were increasing. Well, guess what? Rates went up last week. They went up quite a bit last week. So rates matter, as we've been saying for a year now. Mortgage applications down 2.6% because, again, rates moved higher. Want to shout out, as most people know, I am a Golden State Warriors fan. I was actually a season ticket holder for many, many years. And I just want to leave a quick shout out to Klay Thompson. Klay Thompson provided great memories. He was a great Golden State Warrior. I want to thank him for showing his passion, for coming back from 2 very significant injuries to play. It was always fun to watch you, Klay. And I wish you nothing but the best in your next move to Dallas. So, Klay, thank you and good luck. Weekly jobless claims. Again, folks, we're getting this on Wednesday because tomorrow the market is closed. Weekly jobless claims came in at 238. Forecast was 234. Last was 234. So again, we seem to have left the 200 and the 210 in the rearview mirror, which is where we were for months. We're now up to the 230s. This is not yet the elevator, kind of job market crashing that a lot of folks are talking about. But we certainly are taking the stairs, and taking the stairs makes Jerome Powell smile. So at the end of the day, I want to say that it looks like a July rate cut is not coming. September, I will agree, is on the table, but I'm feeling more and more confident about a November cut. But we shall see as we move forward. All right, and closing thoughts. 5 bad financial advice that I have heard in my adult life. How about this one? I hate this one. I hear this one a lot. Number 1, you want to get rich? Quit your job. You want to get rich? Quit your job. That is poppycock. That is nonsense. For most of us out there, myself included, according to Ed Milet, only 9% of folks are wired to be entrepreneurs, which means 91% of us, myself included, are wired to be employees. Folks, if you are an employee, look at your job as a ticket, not a jail cell. It is the key to get out. Live below your means, sacrifice, live like few so you can live like few on the other side. The sacrifice is worth it. I am living proof of that. Number 2, follow your passion and you will never work a day in your life. This one is interesting to me. This one is very interesting to me. I actually agree and disagree. Let me explain. As you've heard me talk about recently, I'm really enamored with this idea that we all live in 4 seasons. Season 1, somebody else takes care of us. Season 4, somebody takes care of us. That leaves season 2 and season 3. Season 2, I believe you should be chasing money. Where can you be highest paid? Where can you grind? Where can you live below your means? Where can you stack discretionary income so those seeds can become assets? Those assets will let you launch into season 3. Now, where do I disagree? If you are lucky enough to get into season 3 like I was at a relatively early age, 45, and money's not the problem, and you don't do stupid things, chase your passion. Make life happy. Oh, by the way, if you are in season 3, you have really done stuff. You have earned financial freedom. You have a story and a passion that others will want to hear about. So I agree. If you are in grind mode, season 2, go get that money. If you're in season 3, chase your bliss. Have some fun. All right. Number 3, cut out your Starbucks and you will get wealthy. Folks, in my world, it is not the little expenses. It is the big ones. Folks, if you are truly in grind mode and you are struggling to create that extra discretionary income, the best answer, the most important answer is house hacking. If you can take your second largest expense, just so you know, number one is taxes. If you can take your second largest expense, housing, and reduce that by half, or shoot, take it to zero, or as some of our millionaires do, make it negative, which means you get paid to live there, life gets good, and it gets good quickly. Number four, don't worry about cutting, just earn more. How many folks have I heard on social media that says, just keep spending, earn more? It's all about income. Folks, that is nonsense. Freaking nonsense. It is about understanding and creating more and more discretionary income. You can't out-earn bad habits. Again, I love talking to Dr. Mike. Dr. Mike, if you don't know, is somebody who's very big in the fitness game. He's a big bodybuilder. He's a PhD. It's just he's the man. He and I love to talk because the same fitness nonsense and the financial nonsense is there. What do I mean? You can't get a six-pack if your diet sucks. And I will tell you, you can't become a millionaire if your spending sucks. It's just not how it works. So again, I don't mind earning more. Again, step one, you want to create discretionary income. Cut expenses, earn more, do both. Those are only three options. And then the last one, I remember when a VP of sales told me this, I was like, this is the worst advice I've ever heard, but it's out there. Just keep buying the nicer car, buy the bigger house. Just keep adding pressure. Pressure makes diamonds, right? If you're in a commission-based sales rep, I can't tell you how many enterprise sales reps go out and buy the next big car, add more debt, add lease payments, get a second home because they want the pressure to hustle, hustle, hustle. That's not how you do it, folks. So again, those are the 5 bad financial advice I have heard over and over. And finally, I should have done this yesterday, but I got so excited I forgot. We need to congratulate Peter. Peter has closed not 1, not 2, but 3 deals here recently. And Peter, your cards will be going out in the mail today, folks. Again, join the school community, $20 a month, free education, networking, accountability groups, millionaire conversations on replay live. It's the place to be. And if I don't talk to you tomorrow because you're out and about, let me wish you a happy 4th of July a little bit early. And then lastly, tomorrow, 6 a.m., I am premiering Buying Vegas. 6 a.m., that way it's 9 a.m. for the East Coast. This is a special project my wife, Olivia, Ty, and others have been working on. We've got 4 videos in the can. Video 1 goes live tomorrow. So again, no ads, no videos. It's not monetized. I just want to give it back to you. And let me know what you think. Let me know what you think, okay? Again, Buying Vegas, 6 a.m. tomorrow, 9 a.m. Eastern. If you get a chance to watch it, let me know your thoughts. Take care. Bye.